Well, good evening. Ira Epstein with your Metal Market Wrap-Up, and this is for Monday, the 5th of June, 2023, 6:50 p.m. Central Time. Whipsaw days of summer. That's what I'm calling these. You can start with the energies. Over the weekend, as you saw, the Saudis have unilaterally cut 1 million barrels a day. The market went up $2.50 by day's end. By day's end, you were up 17 cents roughly at the last trades of the day in WTI and about 37 cents higher in the Brent. They went to the upper Bollinger Bands and they ran into brick walls at those numbers. You did the same in a large-scale manner in all the stock indices. I'll show that as we get to that in the financial market updates. And if you look at the metals, well, we're trying to get a little bit of a bounce going here. The question for the gold and the headwind is the Treasury has to do a lot of funding. We're going to get results tomorrow, I think, of the 5, 10, and a 17-year, if I'm right, auction. I know it sounds weird, 17, but that's what I think it is. And we're going to see what the market's demanding and who's buying for them to get about $1 trillion sold to refund the Treasury by the first of the year. It's an awful lot. So that's going to be a headwind. Now, it's not a big headwind if it comes out of money market funds, not bank deposits. They sit on a pile of cash, they buy it, it goes in for their yields, and that's their game. That's exactly what they do. It's almost like a Fed. They roll things off, they buy more, and they always have their cash. It's a big deal if we find that it's money coming out in a different manner from bank deposits to buy these, because the Fed's going to have to offer high rates in order to get this money sold. Not going to be cheap rates, it's going to be high. And as they do so, money could come out of bank deposits and say, hey, I'm willing to do this for X period of time and lock those type of yields in. Well, that'll put pressure on the banks. So just keep that in the back of your mind. When we look at gold on a weekly chart of closes, still not back under the 18-week average, and that's where I'm looking for the major support in the market. Now, as we look at the decline we've had in the gold, and you can see, I moved to the August gold number 1. You have a pattern that had lower highs, lower lows, then you had that outside day up, then you reverse course with an outside day down. I mean, it's pretty wild action that's all going on through this. Let's just double check that I'm, in fact, right in what I'm saying, because I do believe I am. The high here, 2,050, and the high here, 2,070. So just to give you an idea as to how that's working, it's just what I said. It's back-to-back outside days, which is very, very unusual. I don't know that you'll find another one on a chart if you go looking for them. That's how unusual it is. But it's there. That's a continuation pattern. So until that high's taken out, I have to assume the market's in a downtrend. The resistance, notice where the market failed, right against the 18-day average of closes, and where the support has been trying to come in is the 100-day. You're in a mishmash, as I call it. Very difficult trade right there. And even if you get through this, you got the Bollinger Band at 1944.60 as support and momentum that was oversold trying to turn up. This is a market, in my opinion, that you avoid. August gold, July silver, as long as you stay under the 18-day average of closes, it means silver should get a better looking chart than gold. And the key to me in silver is to get now back over 24.12. If you do so, I'm not saying you're going to run very far, maybe the Bollinger Band. What I really think is going to happen is you're going to develop sideways action now and churn a little bit as the market tries to figure out the Fed, what it's got, not the Fed for the 14th, the Treasury right now. You got two elements coming at you very quickly. It's already the 5th of June. Don't think this is far down the road, and the markets are trying now to figure out what do I do with all that. The copper market is attempting to make a stand against the 18-day average, big-time resistance if it tries to rally beyond the 200-day average, which is 380. Up to the upper Bollinger Band of 380.50. That's the big resistance area. The market's just sort of hanging on right here, and it's overbought as can be. In the platinum, this is a market that I didn't see doing today what it ended up doing. I frankly didn't think it was going to do this. Here's a market that had an embedded reading, and today I was telling people I think you can finally sell the market, but if you lose the embedded reading, you got to be out, and by the end of the day, that's just what happened. Little bit of egg on my face there, but that happens. I mean, if I walked on water, it would be wonderful. I don't. But in the life of a trader, you're good until your next trade, right? I've had a lot of good ones, but you get bad ones too. And in the dollar, you lost the embedded reading. You made your run towards the 18-day average. Will you go there again is the big question. What is the dollar? It's void of a trend. You have a higher high and lower low. You have the bias up and you're correcting an overbought condition. You could still make a run to that 18-day average. The traders that have been bearish this dollar most of the first part of the year have been proven wrong. This rally certainly caught them. But what do I teach you? I teach you when you get this type of sideways action. Number one, you generally spin around and go nowhere. You hear me say that all the time when the Bollinger Bands narrow in. And I said, it's a son of a gun. That's where you want to avoid. And that is the one that set the market finally to the upside. Okay. Now we're not in that type of pattern. We're just in an ugly pattern where it's hard to figure out what to do with these markets. We have just so much data. Tomorrow's one of these days where you get the Red Book Group sales, and that's pretty much it in terms of economic data. So it's going to be one of these lighter days. We'll see how the markets react to it. I want to remind you, one of the things we have, and you're looking at our free offer page, is all these different free offers that we have, and there's more if you scroll down on it. To get these, all you need to do is follow me, take your cursor, move it to the top of the page, choose what you want just by clicking. You'll put in your name and your email. We get everything out to you, 1, 2, 3. If you have questions, you can call us at 866-973-2077 and our website, iraepstein.com. Have a good evening. I'll see you tomorrow.